As the process of the digitalization of the world continues, we've seen it sneak in and trickle into many areas of life, not limited to online dating. The timeline around online dating is more or less correlated with the increase in usage of mobile apps, mobile phones, and the social media revolution. Younger generations in particular resonate with online dating much more than the others, and I think this speaks out to the changing perceptions people have regarding online dating. There was a very negative stigma around online dating in past generations. However, as people have become more comfortable, this stigma has dissipated with time. In the last 6 years, we've seen the revenue of the total market in online dating increase from about $1 billion to over $2 billion. This in and of itself speaks to the growth in popularity in this area of business. As it stands right now, the United States is the biggest market for online dating platforms. It also has one of the highest user penetration rates at around 11%. More broadly, the Western countries tend to have the highest usages, and the so-called stigma has not dissipated as strongly in other areas of the world, such as Latin America and Asia Pacific. The roots of online dating tracks back to World War I, when soldiers would have pen pals and communicate with people they didn't know in real life. Because some 30+ million people use online dating in the US, that market is somewhat maturing, and the projections are for it to experience the mid 3% range in terms of growth going forward. On the international stage, growth is expected to be above 5%. The expectation is that the rest of the world will start to adopt the trend that's most prevalent in the United States, as the United States is often a trendsetter in many things in life. Online dating has also become more fragmented, whereas you have the more generic platforms that attract all audiences. You also have very specific platforms, such as those that are based on political beliefs, race, sexual orientation, and even education and income class. Nevertheless, as the market continues to grow and as more people spend more time on their cell phones, online dating seems to be an interesting and very attractive area of business that you can invest in. The Match Group is essentially the only company that's publicly traded that operates in this space, and they are by far the biggest player in this market. Match Group has over 45 subsidiaries. Some of its main platforms include Plenty of Fish, OkCupid, Match.com, Tinder, and its recent acquisition of Hinge also puts it at a competitive advantage. What I like about this company is they understand different consumers in this market have different preferences, and therefore they have various different platforms that are diversified and that can attract the different consumers looking for different things. You have Tinder, which is more oriented around the short-term and young audience, and then you have sites like OkCupid and Match.com that tend to be much more personalized and oriented towards long-term and holistic relationships. Match.com also has diversified itself in terms of geography. For example, one of its platforms, TWOO, has a huge presence in Taiwan and other areas of the Asia Pacific. Love Scout 24, another one of its platforms, is known to have a big presence in Germany, Australia, and Switzerland. And Pairs, which was launched in 2012, is a leading provider in Japan. The integration of mobile use into online dating has led to Match.com having somewhat of a renaissance in terms of its business model. The company has been experiencing rapidly increasing revenues, which in 2013 were $788 million, and its most recent annual filing shows 2017 at $1.3 billion. Subsequently, since it's been a publicly traded company from November 20th, 2015, the company has experienced a 289% return on the common stock. It doesn't take a genius to connect the dots. I'm sure you've talked to your friends about the increase in online dating, or out of curiosity you've checked it out yourself. The more people that use these platforms, the more revenue this company makes. Its revenues are primarily derived from two big sources, direct and indirect revenue. Indirect revenue is the advertisements that the company sells on its various platforms, and it represents a smaller portion of the total revenue pie, at 3 to 5%. Direct revenue, on the other hand, is the biggest piece of the pie that comes from subscription and premium fees, as well as one-time a la carte purchases. There are a number of key figures you want to look at when analyzing this company. One is the average number of subscribers they have, which has been growing. Their second quarter in 2017, which was the halfway mark of the year, the Match Group had 6.1 million subscribers in total. Fast forward to the second quarter of 2018, they had 7.7 million subscribers, a growth rate of about 27%. Another way to look at this is the average revenue per subscriber. Q2 2017, you made 53 cents on the average subscriber, whereas in Q2 2018, you made 57 cents, which was an increase of 8%. The company is still a very high-growing company, with its second quarter results in 2018 showing a 36% increase in revenues. Of this increase in revenues, the biggest growing component was its international markets, which grew at 57.25%, and North America growing at 22.5%. When we look at a stock, what you have to really focus on is the story here. And if you believe in the story, then this stock can be an attractive buy. The story is basically this: do you see online dating becoming a bigger or a smaller part of people's lives going forward? I believe it will be bigger because I think mobile activity and internet usage will be bigger. According to CBC Business, from the perspective of sales, the Canadian market is worth $112 million, with the US worth $2.4 billion. The Match Group just in North America is expected to make roughly $900 million in sales, which tells us that just in the North American market, the Match Group has nearly 40% of this total underlying market. Match now has the financial backing to acquire anybody that stands in its way should consumer preferences shift to other platforms. And therefore, they're not too worried about the competition. Here are the polls in the US that show the most popular online dating platforms. The top 4 are all subsidiaries of Match. And if you look at their annual and quarterly corporate filings, they quote themselves that they don't see other platforms as being the biggest competitors and risks to their business model. The biggest underlying risks to their business model, according to their management team, is people shifting their behavior to traditional means in regards to dating. Now, I don't really think one will take over the other completely. What I do think, however, is that online dating is here to stay. With a price to earnings ratio of about 28, the company is not severely overvalued at all and more or less lies with the PE ratio of the market average, being the S&P 500. If Match can continue to hit these strong numbers and expand its outreach globally, this could be a very profitable stock for you to own. We want to thank you guys for listening, and once again, happy investing.